It's another 9-1 down open. Let's get to Bob Pisani. Hey, Bob.
That's exactly right. 9-1 declining to advancing stocks. And of course, the cyclical sectors, the ones that are most exposed to reopening, are the weakest. Let's take a look at the sectors as we do every day. There's energy. Oil's been down 2 to 3% this morning, in and out. Banks, which, as Jim noted, had a very nice move up in the last couple of weeks, or at least last week, down today. Industrials weak. Techs are sort of hugging what the S&P is doing right now, and more defensive sectors like consumer staples are down, but not nearly as much. As you might expect, the reopening stocks, travel, leisure, and some of the real estate investment trusts like Simon Property Group are on the weak side. That's no surprise. This always happens on these. I want to focus on those European stocks because we're seeing much of Europe down about 2%. You've heard a lot about this SAP story, and what everybody's trying to figure out is, as Jim was noting, exactly how stock specific is this. But if there is a fresh wave of lockdowns, as the company has been saying, is that a much broader story? So then it would not be a company specific story. This matters a lot for us because earnings in the fourth quarter have been improving. I know we're focused on the third quarter, but look at the S&P 500 for the fourth quarter. October 1st, we were expecting the fourth quarter to be down 13.6. Today, a few weeks later, down 12.4. Folks, that's improving. And the reason that's happening is the companies who are reporting the third quarter numbers have been really good, 20% above what people normally expect, what the analysts are expecting, and they're raising the fourth quarter numbers. This story could be in jeopardy if the lockdown, if the implications of the SAP story have broader implications. So you see why the market is generally concerned, because things have been going better. And the bottom line is this reminds us that the earnings improving story and the reopening story is hostage to the COVID story and to a certain extent to the election issue too, where there's a lot of anxiety. Let me just show you some quick stats on the election here, because people keep asking me, is it going to be better under Democrats and Republicans in the White House? Ned Davis has looked at this going back 120 years. The bottom line is the market goes up no matter who's in office, Democrats or Republicans in the White House. There's several reasons for that, but more important is to ask what happens if both the White House and the Congress is under the control of one party. Then it gets a little more interesting, but still the market tends to go up. It does best when Republicans are in the White House and the Congress. And again, this goes back to 1900. Average yearly gains in that situation, 7%. When the Democrats are in the White House and in the Congress, the average gains are about 3%. Okay, that's a difference, but it's still up. When Democrats are in the White House and Republicans are in the Congress, it's right in the middle at 5.2%. What's amazing is no matter where you look, the market still goes up, although there are some differences. Why is that? People ask me all the time, and a lot of conclusions when people have looked at this has been widely studied. The simple answer seems to be the president is just not as influential on the economy as everybody thinks. They are not the emperor. They don't control the entire economy. There are a lot of factors that drive stock returns other than who is in the White House. One of the most important things that experts in this always cite to me is the U.S. is a capitalist society. By and large, the means of production is mostly in control of private hands that make private decisions. We also have a functioning court system where contract disputes between parties, between corporations and individuals can be resolved in a relatively straightforward manner. That might seem obvious to everybody, but that's really critical about why the United States has been a successful economy and indeed a successful country, a capitalist country and a functioning court system. So as we're debating all of this about the elections and the future of the economy, let's tend to remember that the market goes up because of the nature of the United States economy in general.
Shepard Smith here. Thanks for watching CNBC on YouTube.